Welcome back. Time to get your portfolio queries answered, and I'm joined by Hemant, CEO of Wiseinvest. Hemant, good evening and welcome to the show. And before we take our viewer queries, let's also talk about sovereign gold bond and the way you can redeem your investment from sovereign gold bond, even if it has not completed the lock-in period of 8 years. So, what's the latest RBI notification saying on redemption from sovereign gold bond? Hemant.
Yes, Kavita, I think the duration of the SGB is 8 years when it matures. But there is also a provision that from the 5th year onwards, investors have the kind of provision to opt for premature redemption, which happens in the 5th year, in the 6th year, and the 7th year. Once in 6 months, you get this opportunity. And this coincides with the period when the interest is paid under the SGB. So yes, recently RBI has announced a calendar basically which involves around 30 series where the money was invested from 2017 May to March 2020. Okay, now there's usually a window of 21 days which is open for investors to decide whether they want to prematurely redeem their SGB, and the money is paid to them within 10 days. So the first tranche which will be eligible where investors can take out their money if they wish to do so is from October 11th to November 2nd, and those who opt to redeem during this period, they'll get the money within 10 days. So this is as per the original terms of SGP. So as you rightly mentioned, I think there is an opportunity for those who may want to exit from SGP without having to do it through the secondary market.
On what conditions should you be taking this particular call? Because see, right now we are also looking at a rate cut scenario which will boost the prices of gold, and on SGB you get a 2.5% interest over and above the market rate. So on what basis should be you taking this decision? And if you want to redeem your money, what is going to be the tax implication? It's all going to be tax free even after 5 years you're taking it out.
Well, Kavita, I think it's a proven fact that SGP is a great option for those who want to, include the gold in the portfolio without having to kind of actually include physical gold. So this is a smart and very great option. One of the factors, obviously, as you rightly mentioned, is that investors get 2.5% interest, which of course is taxable, but it basically earns something for you during the duration of the sovereign gold bond. So clearly, it's a great option. So like I mentioned earlier, investors should be very careful while deciding whether they should opt for premature redemption or not. There are 2 important factors that I think every investor needs to look at. One, you need to have clarity in terms of why did you invest in SGP. If the intent was to invest for the complete period of 8 years, obviously nothing has changed, as you rightly mentioned. We expect the gold prices to maybe go up even from here. While if you see that when the custom duty was cut in the Union Budget 2024, the gold price fell by around 4,500. But if you see the current level, they're back to where the gold was before the budget. So I think custom duty is one of the factors that will impact the gold price. But also let's not forget that as the prices go down, the demand also goes up. So clearly, I see that gold as an asset class continue to do reasonably well. So if the intent was to invest in gold through SGB to have some part of the portfolio in gold, then I don't see any reason why investors should actually rush to kind of prematurely withdraw. It should be taken as a temptation to say, okay, we expect the equity market to do well, so now that we're getting an opportunity to take out money from gold, so let's invest that money in some aggressive asset class and maybe more money. I don't think that will be a great idea. So I think one should stick to the original asset allocation, and considering the fact that gold is still likely to do well going forward, I think it can remain in the portfolio.
Also, one quick question and then we'll go on viewer queries. Now, because we've not been seeing any tranche coming after Feb, is it the time to buy sovereign gold bond from secondary market, or you think one can look at ETF, gold funds, digital gold, etc.?
Well, you can, but obviously with the tax changes now, I think gold ETFs also have become more attractive than what they used to be. So of course there are a number of options that are available. I was only saying from the point of view of existing allocation that you have, but someone who wants to buy, of course there is option of even looking at gold ETF. But I think, as I always say, that when you're looking at gold, you need to have a clarity in terms of why you want to have gold in the portfolio, not just because you're looking at some price movement or something. And I think that holds good for any asset class.
Alright, so that's all about sovereign gold bond, and in case you're someone looking at redemption, now is the time to book all your profits. But then let's move on and let's take Shravan Kumar's question. Hemant, he's doing SIP of 22k per month and wants to achieve 1 CR in 15 years. I think you have his portfolio details. I will not call out the fund names because the time actually is quite short over here. So what is the recommendation looking at the fund mix?
Well, if you look at his target is to get to 1 crore, I think in 15 years. He's currently investing in 22,000 rupees. If he continues this process, assuming annualized return of 12%, he should be able to achieve his target. If you really look at do analysis of his portfolio, out of this 22, 15,000 is being invested in 3 funds, which is one is flexi cap, one is an index fund, and one is a large cap fund. So I think there is too much exposure to large cap. While I believe that it brings stability, but I think it has to be in the right proportion. So my suggestion would be that he can retain the index fund, and for the remaining 2 funds, that's large cap and the flexi cap, you can look at one large and mid cap. There are maybe two large and mid cap. One is Motilal Oswal large and mid cap, and second one can be Bandhan Core. So instead of 2 large cap, look at large and mid. So you will have keep your proportion to some extent even the large cap, but also include mid cap in the portfolio. I think which is broadly missing from the portfolio.
Alright, let's quickly take Jishnu's question. He says he's 34-year-old and doing 20k to invest. He has at least 10k to invest in ELSS and 10k in other categories, Parak Parekh ELSS, Quant ELSS, HDFC Retirement Fund. He's also planning to add Mirai Mid-Small 400 Momentum in his portfolio and a Kotak Small Cap, and whether he should be going for it or not. A Kotak Multi-Cap and a ICICI Multi-Cap is also what he's keen on getting your advice on. And present investment was rupees 5 lakh is in debt. He has fixed deposit and liquid investments over there, and time horizon 15 years and 4 funds and 28 years for HDFC Retirement Fund. That's a separate time horizon based on the retirement goal he's marked on. Expecting 12% return, and he's got some golden locker. He wants to sell it off and maybe invest that money in equity.
Well, I think looking at his time horizon, it's fair to expect a return of 12%. I think that's achievable. But if you look at the fresh investment where it has to be, he has 2 ELSS in the portfolio and 1 retirement fund. So I think since he is looking to invest in the ELSS fresh money, out of the 2, he can invest in Quant ELSS fund, and the second one is the Parak Parekh ELSS. I believe that there are better options than that. One of the options that you can consider for investing fresh money, because for the earlier investment there is a lock-in, he can't do much about it. That can be Motilal Oswal ELSS tax favor. Now, since he is also looking at including a smart beta fund, which is Mirai India Small Mid 400 Momentum 100, these smart beta funds can be a great addition to the portfolio, but I think only for those investors who are experienced, who are very sure as to what proportion of money should go into smart beta fund, but not for someone who is just at the start of investing process. So, my belief is that instead of a small cap and a smart beta fund, he can look at a multi-cap fund, maybe, which is Kotak multi-cap, one of the fund he can look at, and one can be large and mid, which is Bandhan Core Fund, which I just mentioned even in the answer to the earlier query. So I think a mid and a large and mid and a multi-cap fund, I think at this stage will be better option than what he was thinking of investing in earlier.
Let's take Anand Sharma's question. Now he says that he has Tata Tourism and Motilal Oswal Manufacturing Fund. Are these funds good? He's, I think, added and then taking a suggestion, but nevertheless, what will be your advice?
Well, both are, as the name suggests, both are a sector fund. Let me just clarify that the tourism fund, the Tata Tourism Fund is an index fund, whereas the Motilal Oswal Manufacturing is an actively managed fund. Both these sectors, both these schemes, I think have the potential to do well. We've seen the kind of work that the government has done on infrastructure and connectivity. So obviously, tourism has turned out to be one of the well-performing segment of the Indian economy. So there is a lot of potential, and of course, manufacturing has been the priority of the Indian government, and I think is likely to remain so going forward. But the key is when, as an investor, you're investing in the sector fund, despite the fact that both have potential to do well, there are issues there because they can be more volatile. There can be prolonged periods when the sector fund will not do well. As a common investor, it becomes very difficult to tackle those situations. So I think while I would say that both have potential to do well, if you are an investor who in the process of building your portfolio, avoid sector fund, go for well-diversified.
All right, with that, it's time up on the show. Thank you so much, Hemant, for being on the show and helping our viewers with their financial portfolio queries today. On that note, time to sign off, but I'm going to leave our viewers with our WhatsApp number and email ID where they can send across their financial portfolio queries, and we are going to answer it live on the show. Thank you so much for watching. Goodbye.